Chapter 15. Computers and Trading Systems. Traders mistakenly assume that they are automatically better simply because they have access to so much computer power. Grouping tools and indicators. Basic charts: bar, line, point and figure, and candlesticks. Chart scales: arithmetic and semilogarithmic. Bar chart: price, volume, and open interest. For futures: volume, bars, on balance, and demand index. Basic tools: trend lines and channels, percentage retracements, moving averages, and oscillators. Moving averages, reference envelopes, Bollinger Bands. Oscillators: commodity channel index, momentum, rate of change, MACD. Computers and trading systems. Traders mistakenly assume that they are automatically better simply because they have access to so much computer power. Grouping tools and indicators. Basic charts: bar, line, point and figure, and candlesticks. Chart scales: arithmetic and semilogarithmic. Bar chart: price, volume, and open interest. For futures: volume, bars, on balance, and demand index. Basic tools: trend lines and channels, percentage retracements, moving averages, and oscillators. Moving averages, reference envelopes, Bollinger Bands. Oscillators: commodity channel index, momentum, rate of change, MACD, stochastic, Williams percentile. RSI: cycles, cycle finder. Fibonacci tools: fan lines, Aries, time zones and retracements. Wilder, RSI, commodity selection index. Directional movement: parabolic, swing index, ADX line. Parabolic system, SA. Wilder's parabolic system, SA, is a time price reversal system that is always in the market. The letters SA stand for stop and reverse, meaning that the position is reversed when the protective stop is hit. It is a trend following system. It gets its name from the shape assumed by the trailing stops that tend to curve like a parabola. Figured parabolic SAs look like dots on the chart. A buy signal was figured parabolic. Figured parabolic SAs look like dots on the chart. A buy signal was given when the upper SA was hit first arrow. Notice how the SAs accelerated upward during the rally and caught most of the uptrend. A small whipsaw occurred to the upper right which was quickly corrected. This system works when a trend is present. Figure: a longer range version of the previous chart shows the good and bad aspects of parabolic and any trend following system. They work during trending periods to the left and right of the chart, but are useless during the type of trading range that occurred from August to January. Fig. Parabolics can be used on a monthly chart to track the primary trend. A sell signal in early 1994 was followed by a buy in late summer. Except for one whipsaw during 1996, the system has stayed positive for almost 4 years. DMI and ADX. Wilder's ADX line rates the directional movement of the various markets on a scale of 0 to 100. Fig. The ADX line measures the degree of directional movement. A downturn from above 40, left arrow, signaled the onset of a trading range. The upturn from below 20, right arrow, signaled the resumption of a trending phase. Directional movement can be used either as a system on its own or as a filter on the parabolic or any other trend following system. Two lines are generated in the DMI study, plus the and the. The first line measures positive upward movement and the second number, negative downward movement. Figure 15.6 shows the two lines. The darker line is plus the and the lighter line the. A buy signal is given when the plus the line crosses over the line, and a sell signal when it crosses below the line. Fig. The directional movement lines along the bottom of the chart can be used as a filter on parabolic upper chart. When the plus the line above the line, far left and far right of chart, all parabolic sell signals can be ignored. That would have eliminated several whipsaws during the rally phases. The best time to use a trending system is when the ADX line is rising. Fig. The 14-week ADX line peaked in early 1996 from well over 40 and initiated an 18-month trading range in utilities. The ADX upturn during the summer of 1997 from below 20 signaled that utilities. Fig. An ADX line overlaid over a monthly chart of the Amex Oil Index XO. The ADX peaked above 40 in 1990, ending the oil stock rally. The upturn in the ADX line from below 20 at the start of 1995 signaled the end of a 4-year trading range in oil stocks, and correctly spotted the start of a new up leg. Conclusion. Parabolics can generate useful trading signals, but probably shouldn't be used alone. The 2DL lines can be used as a filter on parabolic or any other sensitive trend following trading system. The ADX line, which is part of the DMI system, provides one way to determine which type of market you're dealing with, a trending or a trading market. A rising ADX line suggests a trend and favors moving averages. A falling ADX line suggests a trading range and favors oscillators.